Hey guys, welcome back. Hope you all are doing well. In this video, we are generally going to practice risk MCQs based on risk in banking sector. Okay, we'll go through the different types of risk and the Basel norms related MCQs or the other one. Okay, please do like this video and do watch till the end. And if you are new to my channel, so please do subscribe. So without any delay, we will start with first question and try to answer these particular question in comment section. Okay. So first statement or first question is generally based on different type of risk. So whenever you study risk, so we have these are further classified into two part. One is systematic risk, another one is unsystematic risk. Systematic risk, they are unavoidable in nature, they have a broader impact, and unsystematic risk, they are limited to a particular to an individual or to a particular firm. Okay, so out of these given statement you have to identify the correct one. So systematic risk which affect the entire market, as you can take an example of inflation, recession, world war condition. Okay, so statement 1 is correct. Unsystematic risk is unique and peculiar to a firm or industry. Again, this is also correct, like employee strike or system failures, the problem with internet connections. So these are generally part of unsystematic risk. They are avoidable in nature. We can control the unsystematic type of risk. Okay, so statement 1 and 2 both are correct. So option C will be right answer for this particular question. See guys, whenever you study a risk in any sector, you will find two type of risk: systematic, unavoidable in nature, uncontrollable, non-controllable in nature, and they have a broader impact. They have like we can say they generally impact the entire economy or the world economy. Okay, so like the situation of a recession, so that is part of your systematic risk. Unsystematic risk, they are peculiar to a firm so or individual, like employee strike in bank is type of your unsystematic risk. Internet failure or system failure is generally part of your unsystematic risk. They are avoidable in nature. You can control these kind of risk. Okay. Next question. Dash type of risk with effect which affect the entire market. So as I gave you an example of recession. So what will be your correct answer? Systematic risk. So systematic risk, they are unavoidable in nature. So that generally affect the entire market. Okay. Next question, guys. Which of the following risk is part of banking sector? Okay, so if you study banking sector, so there are so many risks which is involved in banking sector as well. So first one is market risk. So banks are part of market. If anything, let's say if anything happened with the if anything happened bad with the market, so that is definitely going to affect your bank. So it is part of banking sector risk. Liquidity risk, when liquidity is the term liquidity, that means converted into cash. So when any bank, they won't be able to convert their assets into cash. Okay, so that is liquidity as a risk. Operational risk, like system failure, employee strike, that is part of bank. Credit risk, when bank, they lended money to customers and these customers become defaulter, so that is your credit risk. So all the above are generally part of your these are the risks which is involved in banking business. Okay, banking business is very dynamic in nature. So where bank is generally borrowing money from customer and they are lending to the customers. So in between this particular transaction, borrowing and lending, there are so many risks which is generally involved. Okay, next one, the risk that change in laws and regulation will materially affect security business sector market is called. So if any regulatory body, when they are coming with some new compliances, some new rules and regulation, and it affect in a adverse, it basically it affect the profit of banks in an adverse manner, so that is generally known as your regulatory risk. Okay, so market risk we already discussed, like interest rate risk, the equity risk, they are generally part of market risk. Okay, liquidity we discussed, when bank, they don't be won't be able to convert their asset into cash. Operational, if there is any failure of operation. Credit, when this default situation is happened. Regulatory risk is when basically there are some changes in the compliance. There are some new guidelines given by RBI for bank, and as per these particular guidelines, or after these particular guidelines, there is a adverse impact on the profit of banks. So that is generally known as regulatory risk. Okay, next one. The Basel Committee on Banking Supervision (BCBS) Secretariat is located in. So BCBS was founded by BIS, Bank for International Settlement. Okay, and if you talk about the headquarter of BIS or the secretariat of BCBS, that both is located in Basel. Okay, so Basel is a place in Switzerland. So Basel, Switzerland will be correct answer for this particular question. So BIS was founded in 1930, and BIS, they created one committee in 1974, that is generally known as BCBS, Basel Committee on Banking Supervision, and it generally provide the guidelines for banking operation. So what are the current risks, and on the basis of current risk, what should be the suitable decisions of bank, or how they should cope with these kind of risks. So that is generally part of your BCBS. I hope you guys heard about the Basel 1, Basel 2, Basel 3. So these all are the guidelines, set of guidelines, which is released by BCBS. So first Basel was announced in 1988, and second was launched in 2004, and third was announced in 2010 post 2008 recession. Okay, let's move to the next one. Dash the possibility of losses that may arise due to various uncertainties is called. So this is a basic definition of risk. So risk is the possibility of loss in future. Okay, so in when you study in finance, it is possibility of financial losses in the future. So risk, profit you know, loss you know. Hedge is basically to minimize your risk. Arbitrage is buying in one market and selling in another market, right? So possibility of future losses or future financial losses is basically defined as risk. Next one, recession is an example of which type of risk. So many times we discussed this particular term. So I hope now you will be able to answer this question. So what will be your correct answer? Systematic risk. So recession, whenever we announce recession, so it has a worldwide impact. Okay, so when world economy is continuously decreasing over two or more quarters, so that is generally known as recession. Okay, so it has a worldwide impact, so it is like it has a broader impact, so that's why it is generally known as systematic risk. It is unavoidable in nature. Next one, employee strike. So employee strike is an example of which type of risk again. So what will be your correct answer? It is part of your operational risk. Employees are part of operation. Okay, so when they went on strike, so it will affect the operation of any bank. So it is generally part of your operational risk. Okay, so whenever you talk about operational risk, anything which is related to operation, so it can be like if you talk about the risk in operation, like employee strike, transaction risk, so some wrong transaction happen, communication risk, documentation risk, cultural risk, and system risk. So these are generally major risk which is generally involved in the operation. Okay, next one, when an individual investor, business, or financial institution cannot meet its short-term debt obligation, so that type of risk is generally known as liquidity risk. Okay, so credit is when the bank, the customer become defaulter. Liquidity when these entities are won't be able to meet their short-term debt requirements. Strategic, there is some strategy failure. Regulatory, so compliances changes in all, that is generally part of regulatory risk. Okay, so liquidity is when liquidity means converted into cash. When any bank or other institution, they won't be able to convert their asset into cash, or they have like short-term debt requirements. So so that is generally or even they won't be able to pay their debt obligation, short-term debt obligation. So that is generally part of your liquidity risk. Next one, the possibility of default by a borrower to meet its debt obligation is categorized under. So what will be your correct answer now? Credit risk. So credit risk means when a bank give loan to any customer and that customer become defaulter. So that kind of situation or that kind of risk in banking is generally known as credit risk. So bank they use different tool or different rating agencies to overcome with these kind of problems. Like we have civil that is I hope you guys heard about these civil ratings. Okay, so Credit Bureau of India Limited. Okay, and even not only civil for IPO rating we have ICRA Care, or even for economies rating we have Moody's, Fitch. The other like IMF, World Bank, they also provide rating for economies. Right. Next one, risk that arise on an account of adverse business decision or improper implementation of decision. So I hope you remember this one. So what will be a correct answer? It is a strategic failure. So when there are some wrong strategy adopted by any company or any management, so due to this wrong decision, they made some losses. So that is strategic failure. So they have a good plan, but at the time of implementation, so there is a failure in implementation. So that is generally part of your strategic failure. So that is due to this particular losses, so or this failure, they face some losses. So that is generally known as strategic risk. Next one, which of the following statement is are correct regarding BCBS? So I hope you remember BCBS. So it is a committee which is established by BIS, Bank for International Statement. So BCBS stand for Basel Committee on Banking Supervision. Okay. So first statement, Basel Committee was developed by Basel Committee on Banking Supervision, BCBS. The BCBS was established in 1974, which is again correct. Governor of a group of 10 countries. Basel norms are international banking regulation, which is also correct. So what will be a correct answer? Option D will be right answer for this particular one. So why we study Basel norms whenever you study risk? Because the major objective of Basel norms was to protect international banking or any kind of bank failures across the globe. Okay, so BIS, the one of the oldest financial institution, was founded in 1930. Okay, Bank for International Settlement, which is it is located in Basel, Switzerland, and they form a committee in 1974, which is known as BCBS, Basel Committee on Banking Supervision. So initially when it was formed, so there was a group of 10 companies, and the central banker or the governor of central bank is generally member of this particular committee. So like as the time evolved, we generally face new challenges. So how to cope with these particular challenges? They this committee they do research on these particular areas and they provide the guidelines, and these guidelines are generally known as Basel norms, right? Next one, the minimum capital requirement was fixed at what percent of risk weight asset in Basel 1? So what will be a correct answer? 8%. So risk weight assets are like central bank, they generally issue guidelines regarding risk weight asset. Okay, like in home loans we do not have any risk, so in car loan it is different, in personal loan it is higher side. Okay, so if any bank is giving loan in risky assets, so let's say there is a bank who gave loan in risky asset of 100 crore rupees, so on the behalf of this 100 crore rupees they have to maintain some capital buffer. So in Basel 1 it was 8%, so they have to maintain a capital buffer of 8 crore rupees as per Basel 1 guidelines. Okay, so this is totally decided by the central bank of any economy. So like in India it is decided by the RBI, Reserve Bank of India, right? So risk weight asset, please do remember this one, the full form, sometimes they ask the full form as well. Effective use of disclosure as a lever to strengthen the market discipline was introduced in which Basel norm? So market discipline was part of your Basel 2. So first time it was introduced in Basel 2, and even it is part of Basel 3 as well. So there were three pillars of Basel 2. So out of these three pillars we have this market discipline as well. Okay, so option B will be right answer for this particular question. Next one, guys. Which of the following statement is are correct about Basel III? So it was launched in 2010, which is correct. These guidelines were introduced in response of financial crisis of 2008. Again, after the failure of Lehman Brothers Bank. So world economy, they generally face a recession that time. Okay. So after that, Basel Committee, they released guidelines for banking system. So these guidelines are generally known as Basel III, and these were issued in 2010. A need was felt to further strengthen the bank system in developed economies were undercapitalized, over leveraged, and had a greater reliance on short-term fundings. Okay, so again, this is a correct statement. So all the above statement are correct. So now, if you talk about the statement C, so it is like previously we were generally focusing on underdeveloped and developing countries, but after this Lehman Brothers Bank failure, so or this committee, they generally analyze these developed countries banks are under capitalized, they have over leverage, so and even they are generally doing short term fundings. Okay, so to deal with these particular problems, in 2010 Basel 3 guidelines were released. Okay, so these guidelines, Basel third is very important for all of you, so please go through these particular guidelines and read it through thoroughly. So this is definitely going to help you in your upcoming examination. Next one, Basel 1 Accord was established in which year? So what will be a correct answer? 1988. Okay, so first the committee BCBS was founded in 1974, and the guidelines, the first time they released the guidelines, set of guidelines. So these guidelines are called Basel 1, and these guidelines were released in 1988. Okay, July 1988, and India adopted in 1999. Which of the following statement is are correct regarding Basel 1? So it was introduced in 1988. It focused almost entirely on credit risk. Again, this is correct. Credit risk is possibility of losses resulting from a borrower's failure to repay a loan. So all statements are correct. So basically, that time in 1988, we are facing a credit risk problem across the globe. So basically, borrower, they are taking money from the banks and they become defaulters. So to deal with these kind of situations, in 1988, Basel Committee, they released this one. Okay, so these are some outcome. Like 1988, it was based on credit risk. So it decided risk weight asset at 8%, and India implemented and Basel norms in 1999. Okay, so in which of the following year India adopted Basel 1 guidelines? So now this question become very easy. So it was adopted by India in 1999. So like when Basel Committee, they released these particular guidelines in 1888, we start implementing, but it was fully implemented in India by 1999, because we have so many guidelines, we cannot adopt all these guidelines in one go, because we have to evolve the entire banking system, right? So it take time. By 1999, it was fully implemented in India. Next one, Basel 2 guidelines were published by BCBS in which year? So what will be a correct answer? 2004. Okay, so option B is the right answer for this particular question. Next one, Basel 3 guidelines were published by BCBS in which year? So what will be a correct answer? 2010. So with the first question, I gave you these particular years. I hope you guys remember and you will be able to answer these questions. So Basel third, the latest one, the recent one was came after the 2008 recession, global recession, after the failure of Lehman Brothers Bank. Okay, these were launched in 2010, and even we are implementing. If you talk about the India, so we are implementing Basel third guidelines only. Okay, with reference to a banking system, RWA stand for. So I hope this you will be able to answer this question. So what will be correct answer? Risk weighted asset. So risk weighted asset. Okay, option 1 will be correct answer. Risk weighted asset will be right answer for this particular one. Okay, next one. Consider the following statement regarding a risk. So you have to go through these statements. Systematic risk is unavoidable in nature, which is correct. Unsystematic, avoidable in nature. High inflation is an example of unsystematic risk. So unsystematic risk is basically avoidable in nature. High inflation is unsystematic risk. So this become wrong. Labor strike is an example of unsystematic risk, which is correct because it is avoidable in nature. Okay. So now, which of the above statement is incorrect? So option 3 means C. Option C will be correct answer for this particular question. I hope you guys are able to answer these particular question easily. Still, if you face any problem, guys, feel free to reach me and do mention in comment section about any point, any concept. Okay, so I'll try to answer your queries. Now, which of the following is correctly defined? Currency risk, the risk that exchange rate will go up or possibly down or adverse to the customer position. So statement 1 is correct. Currency risk is like, let's say, for $1 the current rate is 82 INR. So you buy this dollar. Let's say you make a buy position. You buy this currency pair. Now what is the risk? So after some time, $1 equal to it become 80 rupees. So this is like the value of dollar is getting down. So when you will sell this dollar, you will get only 80 rupees. So that situation, it is an adverse situation according to your market portfolio. So that is generally known as currency risk. Equity, same in equity as well. Let's say you buy share of State Bank of India at 330 rupees. Let's say you buy share of State Bank of India at 330 rupees. After your profit will be when the share price will goes up. Like, let's say if after some time it become 340 rupees. So you will get 10 rupees per share. But what is equity risk? After some time the prices become 320 rupees. So you made a loss of 10 rupees. So this is called your equity risk. Inflation risk is, it is something related to your real income concept. Okay, so you invest, let's say you invested 100 rupees at the rate of 7%. So after 1 year your money will be 107 rupees. Now during that particular period, this is your nominal income. Okay, so let's say during that particular period inflation is grow by 9%. So now your real income will be, what will be your real income? Real income will be -2. How it come -2? Real income is basically interest minus inflation. So interest is 7%, inflation is 9%. So your investment went in negative. So that is called your real income concept. So the potential for inflation to increase to the prices of goods and services. So that is like as inflation increase, every rupee you own by a smaller percentage. So the value of your domestic currency will goes down. Interest rate risk. So interest rate risk is like when interest rate is behaving adverse to your market position. Okay, so that is interest rate. This is the risk arising from the adverse movement of the interest rate during the period when the asset or liability was held by a bank. So all of the above are correct with respect to their definition. Okay, so these definitions are very important, guys. Please go through these particular definition, and still if you have any problem with any point, please do mention in comment section. So I'll try to solve your queries as well. Okay, so currency, equity, inflation, and interest rate risk. Next question. Which of the following is correctly defined? So again we have currency. I hope you remember the risk that the exchange rate will go up or possibly down. Equity, we already discussed this one. Inflation, interest. Okay, so this is a repeat question actually. So all of the above will be correct answer for this particular one. Next one. Which of the following is incorrectly defined? So now you have to identify the incorrect one. Okay, so go through these particular definition carefully. Okay, I'll hide myself. So first one is operational risk. It is the risk that arise due to fail internal process. So again, like people, system, and all. So this is the correct one. Strategic risk that arise on account of adverse business decision. Correct one. Credit, the risk bank where possibility by defaults. Correct. Regulatory, change in regulatory compliances. So all are correct, which means what will be a correct answer? Option E will be correct answer, none of the above. Okay, so all of the above are correctly defined with respect to different type of risk. Okay, So please quickly go through these particular definition. If you have any query, guys, please feel free to ask. I'll try to explain your queries as well. Okay. Next one. Which of the following statement is incorrect regarding Basel 1? So Basel 1, it was introduced in 1974. So this is incorrect. You have to identify the incorrect one. Okay. So it was introduced in 1888. Okay. 1988. In 1974, BCBS was formed. The minimum capital was fixed at 8%, which is correct. India adopted Basel 1 in 1999, correct. It focused on credit risk, it is also correct. So what will be a correct answer? Option A will be right answer because it is an incorrect statement about Basel 1. Okay. Next one. Which of the following statement is correct? Incorrect regarding Basel 2. So Basel 2 guidelines were published in 2004. This is a correct statement. These are refined and reformed version of Basel 1 Accord. Again correct. The guidelines were based on 4 parameters, which the committee called pillars. So again correct. Okay. So what will be a correct answer? D. None of the above. So all are the correct statements. Okay. So your answer should be this one. So I missed this one. It should be not 4. It is based on 3 parameters, right? So your answer will be C. Okay. Please do correct this one. Option C will be correct answer because these are generally based on 3 pillars. Okay. Not 4 pillars. Huh? I missed this one. So these 3 pillars were capital adequacy ratio, supervisory review, and market discipline. So these are nowadays called pillars of Basel, and these 3 pillars were introduced during Basel 2. Please do remember this one. Okay. So this is the hack. Please do remember this one. Next one. Which of the following is incorrect regarding Basel 3? So incorrect. So Basel 3 was introduced in 2010, correct? These guidelines were introduced in response of financial crisis, again correct. A need was felt further strengthening the bank, develop economies and all. So we gone through this statement, again correct. It was also felt that the quantity and quality of capital under Basel 2 were deemed insufficient. So this is also correct. So what will be a correct answer? None of the above. So all statements are correct. So none of the above will be correct answer for this particular statement. Okay. So Basel 3 we already gone through these particular guidelines. I hope you remember. So these are the major or we can say key takeaways from Basel 3rd. Okay. Chalo. So I already did a video on financial market where we discuss a top 50 MCQs based on financial market. I divided this video into 2 parts. I hope you guys already watched. If not, please go and watch that particular video. That is definitely going to help you in your upcoming examination. Okay. So guys, here we discuss topmost question based on your risk management in banking sector or the basic type of risk. I hope you guys enjoy this particular video. So if you like, please do share with your friends and do like the video. And if you are new to my channel, please do subscribe. And one request to all of you guys, whenever I come with any MCQ session, so first I come with one fundamental video based on that particular topic. So I already did fundamental video. First you should watch the fundamental one and then go for this then go for the MCQ session. Okay, so if you go for the fundamental one now, so you will be able to answer these particular question and it will boost your morale. Okay, so hope you enjoying these particular videos, and if you liking, so please this is my humble request to all of you guys, please do share with others so other can also join these particular videos and they can also take benefit of these particular one. Very soon I'll come with Telegram group as well, so where you can download the PDFs, but PDF is just like we create repository. The only thing is you need a proper understanding regarding these particular topics. So if you have proper understanding, so then you go through these particular practice questions, so you will be able to make good marks in your upcoming examination. So this is it from my side. Thank you for watching this particular video. Hope you enjoy. So I'll see you soon with a new video. Thank you.